we are actually going live. Welcome to LISSAH College and for the webinar, which has been organized by the Postgraduate Department of Commerce, LISSAH, in association with Bombay Stock Exchange. Welcome everyone, and over to the organizers.
A warm good morning to all. Thank you all for finding time and visiting today's webinar. Welcome everyone. Thank you for joining us for today's webinar on BSE's Investors Awareness Program conducted by PG Department of Commerce, LISSAH, in association with Bombay Stock Exchange. It's a wonderful day. We blessed with the presence of an eminent resource person, Ms. Marina Juskanikal, here. Through this webinar, the students will get acquainted with the guidelines to be followed while investing in shares. Please follow the instructions during the session. To keep the quality of sound functional during the meeting, please mute yourself when you are not sharing. Please share your queries and doubts during the interaction section. The live streaming is also available on our YouTube channel. Link is given in the chat box. First of all, I welcome Ms. Amala Pirosh, student second year MCom LISSAH, to deliver welcome speech. Over to you, Amala.
A warm good morning to all of you. It's a pleasure to start this webinar by heartily welcoming everyone. The duty that vested me is to welcome you all to this webinar section. First of all, I would like to welcome our Honorable Principal, Dr. Benny Joseph, sir. Welcome you, sir. I find immense pleasure in introducing our Honorable Chief Guest. On behalf of the Post-Graduation Department of Commerce and LISSAH College, I would like to welcome our keynote speaker, Ms. Marina Juskanikal, the resource person of Bombay Stock Exchange Investors Protection Fund. Welcome you, ma'am. Next, I would like to welcome our manager of LISSAH College, Father Bobby Pulolikal. Welcome you, Father. And I also welcome the Vice Principal of our college, Father Niju Thomas Talachura. Welcome, Father. Participation is the key factor of success of any webinar. So I gratify all the faculties and students of College of Applied Science, Tamarasheri and Kozhikode to this webinar section. Let I welcome Subin sir, Technical Team Coordinator, to this section. Next, I would like to welcome our beloved Head of Department, Mr. Vikas George. Welcome you, sir. And also, I would like to welcome all the faculties and students of LISSAH College. Once again, I would like to welcome each and everyone to this webinar section. I ensure the webinar will be profitable and the few hours will be useful and fruitful for every one of you. Thank you.
Thank you, Amala. On this auspicious occasion, I would like to invite our beloved principal, Dr. Benny Joseph sir, to deliver the inaugural address. Over to you, sir.
Am I audible?
Yes, sir, you're clear. Benny, sir?
Am I audible?
Yes, sir. Please do turn on your camera. That's it. Yeah, good, sir. You're good to go, please.
Good morning to all of you. Respected resource person Marina Juskanikal, our Vice Principal Father Niju Talachura, Head of the Department Mr. Vikas George, faculties, Amala Pirosh, Adul Chand, participants from various institutes, Mr. Subin Varghese, and my dear students. Bombay Stock Exchange provides an efficient market upholding the interest of the investors. Protecting the interest of the investors dealing in securities is one of the main objectives of Bombay Stock Exchange. Yesterday, we have witnessed the historic crossing of 50,000 index. The capital market can grow only when investors find it safe for them to invest and they are assured that the rules governing the market are fair and just to all the players. There are rights of the investors as well as the obligations of the investors. Investor awareness programs are being regularly conducted by BSE at various places in the country to educate the investors and to create awareness among the investors regarding the basic rules of the Bombay Stock Exchange. I hope this program will educate and create awareness regarding the Bombay Stock Exchange among our young students. I would like to appreciate the efforts taken by the Commerce Department of LISSAH, especially our HOD, Mr. Vikas George, for arranging a webinar on BSE awareness. With these words, I'm inaugurating this section. Thank you.
Thank you, sir, for your inspiring words. We got a very talented person, resource person, Miss Marina Joskanikal, for this occasion. Ms. Marina Joskanikal is a resource person, BSE Investors Protection Fund, to conduct investors awareness program in and around Mumbai, Maharashtra, and Bangalore. She completed her graduation and post-graduation from Mahatma Gandhi University, Kerala. She had 2 years working experience as senior manager at UAE Exchange and Finance Limited. She worked in charge of BSE's Investor Service Center, Cochin, Kerala, from the period January 2005 to December 2008. She had 5 years experience as resource person, BSE IPF, to conduct investors awareness program in Bangalore, Karnataka. It's our great pleasure to welcome our honorable resource person, Ms. Marina Joskanikal, to deliver the keynote address. Over to you.
Thank you very much. I would like anyone to confirm if you can hear me speaking. If you can hear is my voice audible?
Yeah, Marina ma'am, you are fine. We can listen to you. Can you share the screen?
Yes, I will, sir. Thank you.
Thank you.
Thank you, sir. Just a confirmation. Are you able to see my screen before I continue?
Yes, ma'am. Very much.
Okay. Thank you.
Can you please turn on your camera?
Oh, yeah. Yes. Is my camera visible? Am I visible?
Not yet, ma'am.
Sir,
It's
now?
Now it's okay, ma'am. Now it's okay. Fine. Thank you.
Okay. So my audio and the video, I believe, is fine, right, sir?
Yes, ma'am. Yes.
Okay. Thank you. So a very good morning to all present here today. Especially to my gratitude to the principal, to the vice principal, to the head of the department, and all students who have joined our session early in the morning. I am very grateful that you found time to attend our awareness program. My name is Marina, and as mentioned, I am a resource person of the Bombay Stock Exchange Investor Protection Fund. Today, I am going to speak to you about investing in shares, and in particular, I shall be speaking to you about what we expect you to do and what we expect you not to do if you choose to invest your hard-earned money in shares. First of all, let us try to understand what is capital market? Since I represent Bombay Stock Exchange, Bombay Stock Exchange is one of the many entities we have in the Indian capital market. Let us first try to understand what is the capital market. So what is capital in the first place? What is capital? Capital is that money that an entrepreneur needs to either start his business or to expand his existing business. That is what we refer to as capital. So the money that an entrepreneur needs to either to start a business or to expand an existing business is what we call capital. And there are many ways by which you can raise capital for your business. So there are many ways by which you can get this money to start your business or to expand your business. One way is to pull in money from close friends and relatives. From your immediate circle of close friends and relatives, you pull in money, and with that money, you can start your business. One way is taking money or taking a loan from a bank or a financial institution. One way is raising money uh, by issuing shares to the public. So you are collecting money from the public, and in return for this money that you have taken from the public, you are issuing shares or bonds to them. Now, this is what we call capital markets. So, capital markets refers to raising capital by way of issuing shares or bonds of that company. And capital market, I would like you to remember that this Indian capital market is not a place where anything can happen anyhow. No, definitely not. The Indian capital market is regulated, and it is very strictly monitored with zero tolerance to any malpractice whatsoever. And who is regulating and monitoring the Indian capital markets? SEBI. Have you, the students, my dear students, have you heard of SEBI, the Securities and Exchange Board of India? All right. So SEBI is the entity that regulates the Indian capital market, that monitors the Indian capital market to make sure that this place is safe for investors. So, is investing in the Indian capital markets safe? Yes, it is safe. And thanks to SEBI, the Securities and Exchange Board of India, the Indian capital market is very, very safe. So, what does SEBI do? What is the function of SEBI? SEBI was incorporated in the year 1992, and the first and foremost uh, function of SEBI was to formulate rules and regulations such a way that the interest of investors is protected. So that is the first and foremost function of SEBI, to formulate rules and regulations for the benefit of the investors. Just like how traffic rules make the road safer for us to travel, likewise, these rules that SEBI has put in place uh, definitely makes this Indian capital market safer for investors like you and me. And keep in mind, these rules are not constant. These rules keep changing with the changes happening around us, with the advancement in technology. These rules will always keep changing. Since SEBI is continuously monitoring the Indian capital markets, SEBI is continuously monitoring the Indian capital markets. They are always taking into consideration what is happening around in the society. They are always taking into consideration the advancement in technology, the way things are happening, and they are always implementing this in the way the Indian capital market is functioning. For example, during the if when you open a demat account, or when you open a trading account with a stockbroker, you were required to complete your KYC formalities by visiting the office of the stockbroker. So once you open an account with the stockbroker, you were required, the investor was required to visit the branch of the stockbroker and complete his KYC formalities. Uh, during the lockdown, SEBI, it became difficult for investors to step out of their house and go to the office of the stockbroker to complete the KYC formalities. Seeing these difficulties that investors were facing during the lockdown, SEBI brought into place a new method of completing your KYC. So now an investor need not go all the way to the office of the stockbroker to complete his KYC. All he needs, this KYC can be completed online via an in-person video verification. Your KYC can be completed online. So, as I was mentioning, uh, these rules are never constant. SEBI is always uh, monitoring what is happening around us, and with the changes happening around us, they always bring about changes to the way things are functioning in the stock market, and they are making these changes for the benefit of the investor. Not a single rule or regulation laid down by SEBI is for the benefit of the stock exchange. Not a single rule or regulation laid down by SEBI is for the benefit of the stockbroker. Every single rule and regulation laid down by SEBI is only for the benefit of the investors. And at any point of time, if SEBI identifies malpractices, if SEBI identifies any fraud taking place in the stock market, depending on the gravity of the situation, depending on the magnitude, or depending on the gravity of the offense, SEBI may impose a fine on you. SEBI may cancel your stockbroking license, or if the offense is very grave, SEBI may you may end up in jail. So there are many instances where SEBI has been very strict, or have identified malpractices. For example, very recently, SEBI had imposed a fine of around 40 crores on Mukesh Ambani and Reliance Industries for some malpractices regarding trading in the script of Reliance Petroleum Limited. SEBI has cancelled the license of a very prominent stockbroker in India, called Karvi Securities. So Karvi was at one point of time one of the top stockbroking companies we had in India. Due to some malpractices that took place prior to the lockdown, SEBI cancelled their license. They can no longer function in the Indian capital markets. Many of you might have heard of the company called the Sahara Group. Yeah, so the Sahara Group had indulged also in some irregularities related to the capital market, which SEBI found to be very grave, and which resulted in their founder Subrata Roy landing in jail. So SEBI doesn't look at whom you are or what position you hold in the society. If you are guilty of any malpractices in the stock market or in the capital market, SEBI will definitely take very strict action. So, is the Indian capital market regulated? Yes, it is very strictly regulated. Are investing in the Indian capital market, is it safe? Yes, it is very safe. And if you have any complaints, and if you start investing, and if you have any complaints regarding any entity in the Indian capital market, all you need to do is approach SEBI with your complaint. All you need to do is approach SEBI with your complaint, and you will definitely get or hear from them within 15 working days. So this is how the Indian capital market is right now. Very strictly regulated, very safe for investors. And if any investor has any complaint, you have all you need to do is approach SEBI, and SEBI will get back to you within 15 working days. So this is just about the Indian capital market and how good and how safe it is for the investors. Moving on to the main part of our session, investing in the Indian capital markets. I told you that at the beginning of my session, I told you that my session will be more about what we expect you to do and what we expect you not to do if you choose to invest in the Indian capital market. Um, what is the difference between investing and saving? First, let us understand saving and investing. Saving is not spending some part of your income, is what we call saving. Then what is investing? Investing is growing your savings. So saving is not spending part of your income, and investing is putting your savings somewhere for a certain duration of time, and at the end of that duration of time you expect your money to grow, is what we call investing. So you are going to put your money somewhere for a certain duration of time. That time duration may vary from 3 months to 6 months to 1 year to 10 years, 15, 25 years. It doesn't matter. But at the end of that time duration, you expect your money to grow, is what we call investing. If you are in India, there are many places where you can invest your money. There are many places where you can grow your money. You can invest, and I have put up those investing options here on the screen. You can invest in bank fixed deposits, you can invest in recurring deposits, in chit funds, in sovereign bond, gold bonds. You can invest in shares, you can invest in mutual funds. Um, so now the question is, why should you invest in shares when there is a risk involved in investing in shares, while you can invest in so many other investing options that have almost zero risk involved in those options? So why should you invest your money in shares when there is risk involved in investing in shares, uh, when you have other investment options that have almost zero risk involved? So why should you then invest in shares? The reason is the one advantage of investing that shares have over other investing options is the returns. So one advantage that, yes, investing in shares has a risk, that I agree, we all agree with that. But the one advantage that investing in shares has over all the other options mentioned in this screen is the returns. By wisely investing in shares, you can enjoy returns as high as 17, 18, 20, 25% per annum from shares, which you don't get from the other investing options. So investing in shares, if done in the right manner, can fetch you returns ranging as high as 17 to almost 25% per annum, which you don't get in the other investment options. Now the question is, now how then do we, or what do we do so that we are able to enjoy that huge percentage of returns on our investment? Unlike other investing options, where if you choose to invest in shares, there are some things we would uh, like you to do. Or I'll put it the other way, there is some effort that we expect from you, uh, before you choose to invest in shares. There are some things we expect you to do, or there are some efforts from yours that is expected from your side before you invest in shares. And I am going to explain all what we expect you to do and all what we expect you not to do if you choose to invest in shares, so that you end up making money in the stock market. First thing, when you choose to invest your money in shares, remember there are so many companies functioning in India. Uh, do you think all these companies are making money? Do you think all these companies um, uh, are all professionally managed? Do you think all of them are making profits? Do you think will you agree with me if I say that all of them are giving dividends from their out of their profits? Well, the answer is no. I'm sure most of you, since all you are I'm you are following instructions to keep yourself muted. Uh, uh, so hence you are probably not able to reply. So but I believe that most of you listening will agree with me if I say that not all companies are in profits, not all companies which are in profits give dividends, not all companies are professionally managed. So when you choose to invest in shares, always keep in mind that you must identify or you must pick those companies that are professionally managed. You must pick those companies that are making profits, that are giving dividends to their shareholders regularly. These are the companies that you are supposed to pick if you choose to invest in shares. There are so many companies functioning in India. Not all of them are fit for the purpose of investing. Not all of them, remember, investing is growing your money. So, not all of them will help your money to grow. Only a few will help your money to grow. In order to identify those few companies, you should do some work, some study of the companies before you invest. You must go and all this information, what the company did, uh, the company's growth, like their sales information, their profits, the dividend payout, all this information, and also information like the top management, what they did and what they did not do. So all this information you get it online uh, from the website of the company. All this information is free. Uh, you can also get this information by visiting the website of BSE. When you visit the website of BSE, all you need to do is type the company name, and you will be directed to a page dedicated to information regarding this particular company whose name you have typed. Get maximum information you can from the website of BSE or from the website of the company. Study the information, and when I say study the information, you don't have to go into technical analysis. You don't have to do too much fundamental analysis. Just see over a period of time, was just sales increasing over a period of 5-6 years, was were their profits increasing, were they given dividends on a regular basis. These are the things that we would like you to keep in mind. And if you are happy with the performance of the company over the last 5, 6, 7, 8 years, then you can say that the company is fundamentally strong, and then you can go ahead and invest your money in that company. So when you choose to invest your money in shares, the performance of the company is the most important criteria that you must look out for before you invest. The performance of the company, the performance of the promoters, the top management, these are the things we want you to look out for before you invest. So this is the effort. So number one, the effort that we, or uh, the work that we expect you to do before you choose to invest in shares, which this kind of efforts will not be expected from you if you invest in bank fixed deposits. This kind of efforts will not be expected from you if you invest in gold, or if you invest in chit funds, or if you invest in recurrent deposits. But this effort is definitely compulsorily necessary and mandatory if you choose to invest in shares. What we tell investors is always get maximum information about a company before you invest. But I would like to change. I would like to bring about a little change to that instruction. What I always tell students when I interact with students, so prior to the lockdown, I used to visit colleges and address the students uh, in their classrooms. And I always tell students, do not wait to start investing in share. Do not wait to start working and save. After saving money, then when you are going to invest your money in shares, then you start reading. Don't wait for that time to come to start reading about companies, or to start reading about how the Indian economy is functioning. You can start, you must start reading today itself. uh, Start today before you sleep. Take one uh, Go online, pick one business article, read one article before you sleep. The first time you read a business article, you may not understand what is given in that article. Do not let that discourage you from reading tomorrow. It's okay. The first time you read a business article, you may not understand what is given in that article. That is fine. Tomorrow again, take up another business article and read. Keep doing so every day. Every day, just before you sleep, read one business article. And as days, weeks, months pass by, the first article you couldn't understand the terms and terminologies used in that used, so you couldn't make head or tails of that article. Fine. But as days, weeks, months pass by, you will slowly start understanding these articles, these terms and terminologies. You will start understanding these terms and terminologies. Slowly, you will start understanding what has been written in this article, and slowly you will start enjoying reading these articles. So what started off as casual reading has over a period of time will slowly move on to serious reading. So what started off as casual reading will slowly move on to serious reading. And this reading that you are doing every day on without fail will only add to your knowledge, and this knowledge is will give you the confidence. It will give you a lot of confidence, and this is the confidence you need when you attend interviews. This is the confidence you need to stand up in front of your class to give a presentation. So this confidence that you will need at some point of time, this confidence you get by by gaining knowledge, and this knowledge you get by reading. So if you want to be confident by the end of your study in a few months time, many of you will graduate from college. So if you want to be very confident in a few months from now, the only one way to get that confidence is to start reading, and read as much as you can. Do not be discouraged if you don't understand some jargons. Slowly, with time, these jargons will make sense to you, and this knowledge will give you confidence, and this confidence is what will see you through in life. Coming back to our session, uh, as I mentioned, that if you choose to invest in shares, do not compromise on the company. The company should be one of the best companies we have in India. We have many companies that are good, that have very good sales, that have posted good sales consistently over many years. We have many companies in India which have been in profits, as well as given uh, they do give dividends to their shareholders. So identify those companies and invest only in those good companies. Once you start investing in shares, and when people come to know that you are investing in shares, uh, uh, so once people come to know that you are investing in shares, let me give you an idea of what you can expect. You will start getting tips from your friends. You will start getting tips from your neighbors, from your relatives, from your colleagues. You get tips from all corners. Okay, from via SMS also you will start getting tips. You will be prone to listening. Once you start investing in shares, you will be prone to listening to watching those business TV channels. So you will get tips from all sides. Among all these different tips you get, there will be people telling you to invest in shares trading at 50 paisa or trading at 1 rupee per share. This 50 paisa per share companies or 1 rupee per share companies are what we call the penny stocks. We refer to them as the penny stocks. So you will be getting information as buy this company shares trading at 1 rupee, and in 3 months time this 1 rupee will hit 10 rupees. When you hear this kind of advices, it's very tempting, because if you buy 10,000 shares of that company trading at 1 rupee, all you need to do is shell out 10,000 rupees. If you have to, if the company share is trading at 50 paisa, all you need to do, and if you buy 10,000 shares, all you need to do will be shell out 5,000 rupees, which may look like, very affordable. When you start working, 5,000 will be a bit of kind of affordable. 10,000 also will be affordable. So you will be tempted to put in your money. What we have seen over time, over the years, is all those people who have invested in penny stock have only lost their money. So, my dear participants, everyone listening to me today, please stay away from penny stocks. Do not invest your hard-earned money in penny stocks. Always look out for companies that are growing. Look out for companies that are changing. Remember, the world is constantly changing. Things around us are changing. We've never seen a lockdown in our life. Our parents have never seen a lockdown. Our grandparents have never seen a lockdown, and their parents also have never seen a lockdown. But we this one generation, we were doomed to see a lockdown. So, and I don't want to dampen your spirit. I don't want to spoil your morning. That's what, according to WHO, we can expect. I'm so sorry to tell you, but according to WHO, we can expect more pandemics, and more pandemics means there will be more lockdowns in the future. Well, I hope it doesn't happen anytime very soon, because we are really fed up of really the lockdown took a toll on all of us. So, as I was saying, the world is constantly changing. Things are companies, look out for companies that are also changing with the changes happening around us. Um, I'll give you an example. You all know that the reserve, the crude oil reserve, as per reports, we have enough crude oil just for another 20, 15 or 20 years. So after that, once crude oil uh, uh, is uh, is completely over, uh, how do we expect our vehicles to run? So that is why, keeping this in mind, automobile companies have started uh, uh, R&D. They've started looking out for, or trying to bring out cars that need not be need not run on petrol or diesel fuel. Most of the companies are now looking out at bringing out electric cars, and or some many companies are trying other renewable sources of energy to power automobiles. So you have to look out for this kind of for companies that are dedicated to to evolving, and that are dedicated to changing for the betterment of or changing as per the changes happening around us. um, have moderate expectations of returns from the stock market, though I mentioned that good companies can fetch you ranging from 17% to 25%. Sometimes, at some point of time, every company will go through a bad phase. Please do not let that uh, uh, make you immediately sell off the shares of that company. Every company will go through a bad phase. Their performance may dip. You might find a dip in their performance. You might find a dip in their profits, and a dip in their dividends, or they may not even declare dividends that during that period. Please do not be discouraged. These companies, which are professionally managed and are definitely managed by the best professionals we have in India. These best professionals, they know how to bring this company out of whatever crisis they are facing. So be patient. These companies are in good hands. So the top management will definitely bring this company out of whatever crisis they are facing. Um, have long-term view of the markets. The Indian capital markets is a place where you enjoy the benefits of your investments, provided you keep the shares. You are patient enough to keep the your investments for at least for 5 years, for as long as you can, 5 or more years. If you are looking out for profits, or growing your money uh, in short term, then my advice to you would be, please stay away from the Indian capital market. You cannot predict when the market will come crashing or when the market will go up. um, if you're looking for short-term investments, then stay away from the Indian capital market. Invest in the capital market, provided you are ready to keep the investments for as long as 5 or more years. Um, the next point says, do not panic sell. You see, the Indian capital market, I'm sorry, the Indian capital market uh, is consists of crashes and recoveries, crashes and recoveries. You can never say when it will crash. You can never say how low it will go when if it's going to crash. So you can never say which day it will crash. You can never say what is the bottom limit is going to touch on that for that particular crash. You can never say when it will recover. But I can tell you very confidently that after every crash comes a recovery. So do not panic and sell off your shares just because it has crashed. Wait, after every crash comes a recovery. The BSE Sensex was incorporated. It started in the year 1986 at 100 points. So from 100 points in 1986, as Principal Sir mentioned yesterday, we hit an all-time high of 50,000 points. So in 1986, it started at 100, and it went all the way to 50,000 points. A layman, a person who is not very familiar with Indian capital market, will tell you that the Indian capital market always crashing. It's always crash, crash, crash. Why do common people, why do layman associate crash with the Indian capital market? Uh, that is because whenever the stock market crashes, it's big news in newspapers. It is big news in TV channels. uh, when it recovers, when the Indian capital market recovers, this kind of news, this kind of news do not make it to the front page of any newspaper. It doesn't. It is not mentioned on any news channels. It is hardly mentioned anywhere. It is uh, all of you. Uh, when there is a when there is a plane crash, you all see those pictures in the front page of the newspaper. Those pictures of the wreckage will always make it to the front page of a newspaper when there is a plane crash. Yes. How many times have you read in the newspaper, today 80,000 flights took off and landed safely? Have you ever read that news in the newspaper? All right. When there is a crash, it makes it to the front page of the newspaper. But when everything is going smoothly, that those kind of news that finds no mention in the newspapers. The same is with the stock market. When there is a crash, it's big news. When there's a recovery, there is no news at all. So please keep in mind, every crash is followed by a recovery. That is the only way I can explain how 1,000 has reached 50,000 when there have been so many crashes in between. So do not panic and sell off your shares. When there is a crash, be patient. Be patient. The stock markets will definitely recover. Never borrow money to invest in shares. You can borrow money for your child's tuition fees. You can borrow money if there is a medical emergency in the family, but never to invest in shares. Always read about the companies you have invested in. Keep monitoring your investment regularly. I already mentioned this before. This points before. Do not act based on tips. A lot of tips will come your way. Before you invest, you should be confident about the company, and when I mean you should be confident about the company, what I wanted to convey is, you should get information, maximum information about the company, and you should be sure, based on that information that you have, you should be sure about the company before you invest. Beware of people who come to you saying that they will double your money or triple your money in 3 months, 6 months, 1 year in the stock market. The stock market is not a place where your money can double or triple within a short period of time. I told you the stock market is always long term. Uh, Please stay away from anyone coming to you with this kind of schemes. Have nothing to do with this kind of schemes. What we have seen, all those who have invested in this kind of, we call these schemes get rich quick schemes. So anybody who has invested in this get rich quick schemes have only ended up losing their money, and it gives us no happiness to see people losing their money in the stock market. So stay away from these people. So in a nutshell, what I have explained so far, when you choose to invest in shares, please do not compromise on the company. The company should be one of the best companies we have in India, and there are so many companies that are good for the purpose of investing, for the purpose of growing your money. When you choose to invest, please diversify your investments. Do not invest only in banks, or do not invest only in banks and software companies. That is not how to invest. When you choose to invest, you are supposed to invest some money in uh, invest this month in a good automobile company. Next month, invest in a software company. Next month, the month after that, invest in a banking company. The month after that, invest in a healthcare, a company belonging to the healthcare sector. The month after that, invest in a company belonging to the FMCG sector. Then come back to uh, automobile, then repeat. So you repeat automobile, the bankings, then software, then uh, uh, healthcare, then FMCG. Again, you repeat. So every month keep aside some money to invest in shares, and make sure that your investment is diversified across different sectors. So we have different sectors. We have automobile, we have banking, software, so many sectors. So make sure your investment is diversified across different sectors, and always pick the best company in that sector. Invest regularly, keep doing so every month, and always invest keeping long term investment planning in mind. So these are the principles of investing. These are the principles that I would like you to keep in mind while you invest in shares. I will be sharing this PPT with Vikas sir, and I request Vikas sir to share with all the students who have attended this session. Once you have decided once you choose to invest in shares, there are three accounts. I will very quickly mention this because I think I have almost run out of time. I think I have run out of time. I very quickly explain this. There are three accounts you will have to open before you can finally invest in shares. The first account is your bank account. Your bank account is the account you open with the bank for the purpose of keeping money. The second account is your demat account. Excuse me. So a demat account is an account you open with a depository participant or with a stockbroker, or you can also open your demat account with a stockbroker. Uh, a demat account is an account you open for the purpose of keeping shares. I have interacted with a lot of students. I have interacted with students in Kerala. I have interacted with students face-to-face interaction with students in Kerala. I have interacted face-to-face with students in Bangalore, here also in Mumbai, and I have understood that a lot of students are of the impression that you need a demat account to trade. No, a demat account is not the account you need to trade, to buy or sell shares. Demat account is an account you open to keep shares. When just like a bank account is an account you open to keep money. A demat account is an account you open to keep shares. When you want to buy and sell shares, you open a third account called the trading account. And a trading account, this is the account you use if you want to buy and sell shares. Um, these are three different accounts. These three different accounts have three different account numbers. They have since we are all now in the we all now prefer to do things online. These three different accounts will have three different usernames and passwords. So these are three. Keep in mind, these are three different accounts. The bank account is to keep money. Demat account is to keep shares. You can put in shares or you can take out shares. You cannot do anything else with your demat account. And trading account is to buy and sell shares. So when you buy and sell shares, you have to do it through a stockbroker. You cannot buy and sell shares directly with a stock exchange. You have to do it through a stockbroker. So that is why you open a trading account with a SEBI registered stockbroker. You open an account with a stockbroker, then you buy or sell your shares through the stockbroker. You can either go to the office of the stockbroker and tell them in person, I want to buy 10 shares of ITC, or you can call up the stockbroker from your house and communicate what shares you want to buy, 10 shares ITC at 150 rupees per share, or you can, using the username and password given to you when you open that trading account, using that username and password, you can sit at home and log in to this stockbroker's trading platform using your username password, and you can place your buy and sell yourself. This trading platform are all very easy, very user friendly platforms. You can very easily use those trading platform to do it, to buy and sell yourself. Irrespective of how you place your buy or sell, whether it is through that online platform or whether you are placing it through the phone or whether you are going to the office in person and telling them, irrespective of how you place your order, it will always go through the stockbroker. So your order, your buy or sell is always going through your stockbroker server, and from your stockbroker server, it is going to the server at BSE in Mumbai. So that is how you place, that is how you trade. I shall just explain how trading takes place before I end my session. Assume you are in Kerala, you are in Calicut city. You have you want to buy. Okay, you want to buy 10 shares of ITC at 150 rupees per share. You go to your stock or you place the order yourself through your trading platform, trading account. Sitting at home, you place the buy order, buy 10 shares ITC at 150 rupees. This buy request went to the server at BSE. It stayed there in the server at BSE. A few hours later, someone in Delhi, he has 10 shares of ITC which he wants to sell at 150 rupees. He also places his sell order at Delhi. The sell order goes through his stockbroker's server and has finally reached the server at BSE in Mumbai. Remember, your buy order, buy 10 shares ITC at 150 rupees, enter the server this morning at 10 a.m. A few hours later, someone from Delhi placed a sell order. Sell 10 shares ITC at 150 rupees per share. Your buy order, buy 10 shares 150 at 150 rupees per share, automatically will get matched with sell 10 shares ITC at 150 rupees per share, which came from Delhi. So your buy order from Calicut or from Kozhikode, which was placed in the morning, gets matched with sell 10 shares ITC at 150 rupees, which came from Delhi. And this matching takes place at this server at BSE in Mumbai. So this is how a trade takes place. You place your buy order from anywhere in the country. That buy order will go to the server will come to the server here at BSE in Mumbai. You place your sell order from anywhere in the country. That also will come to the server at BSE in Mumbai. And at this server, this is where a trade or matching takes place. So when a matching takes place, that is when we say a trade has taken place. So assume a trade took place. So your the buy order you placed from Kozhikode got matched with the sell order that came in from Delhi. So which means a trade took place. And when a trade took place, the buyer who is at Kozhikode, you have to transfer 1,500 rupees. So I have only calculated the trade amount. I have not taken into consideration the brokerage or the commission you have to give to your stockbroker. You have to give your stockbroker commission for every trade that you do, which I have not taken into account here. So, but just the trade. So you have to since you are a buyer, you have to transfer, and a trade took place. You have to transfer 1,500 rupees from your bank account to the bank account of your stockbroker. The stockbroker will transfer this to Indian Clearing Corporation, which is a unit of Bombay Stock Exchange. Indian Clearing Corporation will give that money to the bank account or transfer that money to the bank account of the seller stockbroker in Delhi. The stockbroker in Delhi will transfer that money to the seller's bank account. So the seller has got the money in his or her bank account. The seller, he sold 10 shares of ITC. Where are these 10 shares? Where are they kept? These 10 shares. Are they kept in the locker, in the bank locker, or are they kept in the wardrobe of the seller's bedroom, or are they kept in Demat account? These 10 shares are kept in his Demat account. So the seller will have to transfer 10 shares of ITC from his Demat account to the Demat account of his broker. The broker will give these 10 shares to Indian Clearing Corporation's Demat account. Indian Clearing Corporation will give those 10 shares to the Demat account of your stockbroker in Kozhikode. And once this 10 shares has come to your stockbroker's Demat account, your stockbroker will transfer those 10 shares to your Demat account. So this is how the buyer gets his shares and the seller gets their money. Money moves from the buyer's bank account to his broker's bank account, to Indian Clearing Corporation's bank account, to the Delhi Stockbrokers bank account, and then finally to the seller's bank account. The shares will move from the seller's demat account to the Delhi Stockbrokers demat account to Indian Clearing Corporation, then to your stockbroker's demat account, and then finally it will come to your demat account. This is how trading takes place in the stock market. This will bring me to the end of my session. I am extremely sorry that I took a lot of time, but I still will appreciate if we could have some interaction with the students. If you have any queries, please do put up your queries.
Thank you so much, ma'am. We'll use this facility to have the interaction with the students. We'll wait for the questions by the students, if any.
All right. I got a message asking any advice regarding day trading. Let me explain what is day trading. Let me go to the chat to see if there are any more queries. Okay. Let me explain what is day trading. Uh, Day trading is trading in within a day. So let's break down that definition. Day trading is trading within a day. And what is trading? Trading is buying and selling. So I told you a trade in the stock market, a trade is when buy and sell takes place. It's called a trade. So when you buy and sell the shares of a particular company in the same day is what we call day trading. So when you buy and sell the shares of a particular company on the same day is what we call day trading. So you buy shares in the morning uh, at 100 rupees. And when it reaches you, so you buy 100 shares of a company at 100 rupees. When it reaches, assume the price goes up on that particular day, it from 100 rupees it goes to 103 rupees. You bought 100 shares, so 100 it from 100 you bought 100 shares at 100 rupees. It during the day it went up to 103 rupees. Then you sold off 100 shares at 103 rupees. You made 3 rupees profit per share. So overall, you made 300 rupees profits from that transaction. You bought 100 shares at 100 rupees. You sold later on. You sold in that same day. On the same day, you sold 100 shares at 103. You made a profit of 3 rupees per share. As a result, 300 rupees overall profits you made on that particular day. The stock market is Indian capital markets is such that you can never predict when the stock market will go up or when the stock market will come down. You can never predict that. Let me see if I can share a particular slide. Okay, I'll just keep that because I have anyway taken up too much of your time. Uh, the stock market consists of ups and downs. The stock market consists of ups and downs. This ups and down, okay, on a particular day it goes up, it goes down. So if you are looking at the performance of the Indian capital market in the short term, if you're looking at short term performance of the Indian capital market, you will find that the Indian capital market, the Sensex graph is not a straight line. It is not a curved line either. It is a graph that consists of so many ups and downs, so many ups and downs. But if you take a long term view of the same census graph, you will see that this census graph, it does consist of ups and downs, but these ups and downs have an upward trend. These ups and downs have an upward trend. So on a particular day, we cannot, with nobody, no matter what kind of an expert you are in the stock market, you can never predict when it will go up or when it will come down. So we discourage anyone from uh, taking from doing day trading. We totally discourage anyone from indulging in day trading. We always that is why it was never mentioned in my presentation. We always advocate, we always advise to go long term, because let it let it crash, let it gain, it will crash, gray. It goes this way: crash and it will recover, it will crash, 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 it will recover, and crash and recover. So the crash and recovering is always happening, but this crash and recovery is taking place in an upward trend. That is why you always go long term. Um, so I do I my, on a personal note, and everyone would advise you stay do as much as possible. Do not indulge in day trading. What kind of stocks should I avoid? Avoid penny stocks. Avoid the companies that are not functioning well in India. Avoid the companies that are not professionally managed. Avoid the companies that do not adapt to the changes happening around us. Avoid the companies that are not innovating their products. So these are the companies you should avoid. Or let's put it the other way: what companies should I consider or should I invest in? Invest in those companies that are professionally managed. Invest in those companies that are constantly improving their products, their services. Invest in only those companies that are changing, that they are dedicated to changing with the changes are happening around us.
Ayah berarti cakap. Ni je kan.
You may put up your queries if, on the chat box if there are any. Okay. In the meantime, I shall share my number with you, with all the students. I shall also share my email ID with you. If you have any queries,
We will go ahead and take some time for the questions. Participants, please raise your queries.
okay. In the meantime, I have put up my WhatsApp mobile number on the chat box. I have also mentioned put my email ID. Maybe right now the students don't have any queries. Maybe tomorrow you might have a query, or maybe next week or next month or next year. Yes, it doesn't matter. Whenever you have a query, please feel free to contact me via WhatsApp or via email. I might not reply in 10 or 15 minutes. Vikas sir is knows that I don't reply in 10 15 minutes. He keeps reminding me to reply. So because of the workload that I have. But I will definitely reply by the end of the day. Whatever the time may be, I will definitely get back to you. So if you have any queries, but if you have query now, please put it up on the chat box. And at any point, if you lose my number or my email ID, please collect it from Vikas sir. Sir, if you are attending this
Hello,
session,
ma'am.
I request you. Yes.
Can you hear me, ma'am?
Yes, I can. Yes.
Ma'am, we studied various type of analysis while selecting shares, like fundamental, technical analysis, etc. Have any importance on this type of analysis while selecting shares?
Yes, yes. This analysis are very useful in helping you decide which companies to invest in and which companies not to invest in. This analysis, technical and fundamental, are used by stock market experts too. This is what they use to help them decide where to invest and where not to invest. Not everyone has that knowledge. uh, Not only knowledge, not even if you have knowledge, many of you might be having commerce background. Many of you would be studying this in your PG at PG level. But even if you have the knowledge, once you start working, let me tell you, once you start working, even if I belong to the stock market, I've been involved in the stock market for so many years. We don't get time. to do technical analysis and fundamental analysis. Let me be very honest with you. We can just spare a few, maybe 1 hour at most. And in that 1 hour, the maximum information you can get would be just browsing through the websites of the companies and getting information about the sales, the profits, the dividends, what was the pattern over the last 5, 10, 15 years. You can just manage to squeeze in some time for this kind of information. So I am not downplaying the importance of technical analysis or fundamental analysis. It is very important, and it is used by professionals to help decide where to invest and when not to invest. But in an event where in a scenario where you may not get time, or in a scenario where you may not have adequate knowledge to use this analysis, you can always rely on this general information that I had mentioned in my presentation. Uh, so you asked, are they important? Yes, they are important. They are very important. If you can use it, please do. If you have the time and if you have the technical know-how to use those analysis, to put those analysis into use, please do so. Please, you must do so. But if you don't have the time, don't be discouraged. Getting basic information will help. Um, Fine, great. Maria Tom has asked the question: how do we identify a good company when there are so many companies listed in India? When there are so many companies not only listed in India, there are so many companies functioning in India and also listed in the stock market. Any idea how many companies are listed in the stock market? There are around 6,000 companies listed in BSE and NSE put together. The question is, how do we now identify? Uh, I don't expect you to browse through the website of 6,000 companies, study the performance of 6,000 companies before you finally identify which are the good ones and which are the bad ones. It is Nobody does that, and it is so time consuming. It is not time consuming. I'll put it this way: it is waste of time, and no one does that in the first place. So then how do we bring down? Okay, there are 6,000 companies listed in BSE. How do we bring that 6,000 to a manageable number? How do we bring it down? By observing what is happening around you. When you move around your city, there are you will see a lot of commercial establishments. You will see a lot of uh, branches of banks. You will see a lot of products when you move around you. So keep a mental note of what you are observing when you move around the city. When you come out of your city, when you many of you, once in a while, you might visit close by cities of other states. Like many of you, once in a while, will pay a visit to Chennai. Once in a while, you pay a visit to Bangalore. So when you visit, or when you move out of your state, when you go to other states, just observe what is happening in those cities. Let me put it this way. You moved around for various reasons. You have moved around Kerala. You have come out of Kerala. You went to Chennai. You went to Bangalore. And when you moved around, you notice that the State Bank of India is one bank whose branches, which this particular bank, you will always find their branch at any city you go to. Not just one, you will find many of the branches at any city you go to. Tell me, what can you conclude about a bank having many cities? I'm sorry. A bank having many branches across India. Is it a bank doing good business or a bank doing bad business? Anyone can unmute or can just put your message. And the question is, what can you conclude about you? This is what you observed when you moved around uh, various cities. You notice that there are many branches of State Bank of India. My question to you is, what can you conclude about a bank having many branches in your country? Is it a bank doing good business or a bank doing bad business? uh, shall I? Will you agree if I say it's a bank doing good business? I mean, we can not we can assume. I say we assume that since it has many branches, it is a bank doing good business. So you identify, but when you move around, let's take one more example. If you stand in front of the if you stand on the road, uh, very close to your home, and you observe the vehicles plying on the road, which automobile company's vehicle car do you expect to find more on Indian roads as compared to other automobile companies? uh, you agree if I say Maruti? You will find more Maruti cars on the roads as compared to other companies. All right, so this gives us an impression that Maruti is a company doing good business. All right, so by observing, now we have started identifying companies doing good business. So you do not have to browse through the website of 6,000 companies to identify the companies doing good business. By observing what is happening in your city, you can identify those companies doing good business. Let's take one more example. You go to a supermarket. If you stand in front of the rack where they have stacked uh, toothpaste, which company's toothpaste do you expect to find stacked more on this rack as compared to other companies' toothpaste? Which company's toothpaste? This I'm not going to answer. I want you to answer. I answered the first two questions I asked. So this third question you have to tell me. Which company's toothpaste do you expect to find stacked more on the rack as compared to other companies' toothpastes? Anyone?
You can clear your doubts through the through message given to the given number. I think we are good for now. Thank you, ma'am, for the wonderful session.
Okay. Thank you very much. I'm sorry I couldn't
Hello,
check.
hello. Excuse me, ma'am. Can I? Hello.
Yes, sir.
Ma'am. I think can we forward other queries through mail or your WhatsApp number if
Yes,
you don't mind?
definitely. Because I think we have taken up time.
Okay, this is. I think we planted to stop. We have 30 minutes more. Or so
We have
can
exceeded
we?
by 30 minutes.
Yes.
Okay. So
Okay,
sorry.
then if you don't mind.
Oh no, sir. No, sir. Sir, no, sir. That is the reason why I gave my mobile number and my email ID as a reach out to me.
Okay. If any queries are there, I will inform you, and we can clarify that. Okay.
Yes, sir.
Thank you, ma'am. Now let I invite Mr. Atul Chand, Student Second Year MCom LISSAH, for expressing vote of thanks.
Good morning to one and all. It's my privilege to have been asked to propose vote of thanks on this occasion. On behalf of LISSAH College and PG Department of Commerce, express a very hearty vote of thanks to the honorable delegate who blessed us with their presence and spent their valuable time on their busy schedule with us. First of all, I would like to express our gratitude to Dr. Benny Joseph Sir, Principal of LISSAH College, for his valuable words. Next, I would like to thank our resource person, Ms. Marina Kaninkal, for gracing today's webinar. Thank you, madam, for your very interesting and thought-provoking presentation. We are knowledge and presence, madam. I would like to thank our manager, Reverend Father Bobby Pularikal, CSP, and our vice principal, Reverend Father Niju. sorry. Next, we would like to, we are also happy to propose vote of thanks to the HOD, faculties and students of College of Applied Science, Tamarsheri and Kozhikode for their participation and cooperation in this webinar. I would like to thank our beloved HOD, Mr. Vikas George, and other faculty teachers of our Commerce Department and students for their encouragement and cooperation also. Express our special thanks to Subin sir and Mr. Melvin Thomas for their technical support and assistance. And special thanks to all the participants who has made this webinar a grand success. Thank you.
Dear all, please submit the feedback form properly for issuing participation certificate. The link will be available in the chat box.
I thank you all. I would like to express my heartfelt gratitude to the management of Little Flower Institute of Social Science and Health for giving me this opportunity, or for granting this the opportunity to conduct this session. But most of all, I would like to place my heartfelt gratitude to Vikas sir, to HOD Vikas sir, for being very patient with me, for organizing this in association with BSE, and getting other colleges to participate in this session. I wish all the students the best of luck for your future. I hope you keep in mind what I have explained today. For if you choose to invest in shares, and I hope my session was informative and you gained from my session. So thank you very much for all the for attending my session, and all the best to the students and faculty also. Thank you.
Have a nice day. Thank you all.
So,
Have
Vikas sir, may I now exit the session?
Yeah,
Okay.
yeah, ma'am, you
Thank you,
can.
sir.
Thank you, ma'am. Thank you very much. Thank you, ma'am.
Thank you so much.
Thank you everyone for your participation. The feedback link is now available in the chat box. Kindly fill it without any errors. And the YouTube streaming for this program will end in another few seconds.